So the first thing before I take any trade is I want the weekly, daily and hourly time frames to be aligned. So this means that I will do top-down analysis starting from weekly down to daily, then hourly. The first thing is looking at PD arrays, that is fair value gaps, inverted fair value gap, and liquidity pool, breaker block and order block. So these are the first things that I identify across multiple time frames. So the direction of the trend or the order flow is determined by how price is respecting or violating these PD arrays. But then the second step is liquidity run just before the new session opens. So I'm going to demonstrate this when we go to the chart. And I'm going to look at one example so that you can be able to understand that. Then step 3 is market structure shift. On 5 minutes, I would want to see a market structure shift followed by a displacement. And that is when I can now enter the market. This is gold on a weekly time frame, and you can see that price has been pushing up. So we have a sweep of liquidity above this level. And after that, we've started breaking structures downwards. So we have sell side liquidity there that has been violated. And this has also been violated on a weekly time frame, and this as well. So this simply means that price, if it continues pushing down, then it's going to take this level. Now this will become our target. When we go down to the daily time frame, we can see the levels where price has been violating sell side liquidity. We just had a push to this institutional order block, and we expect this level to be taken. So the weekly order flow has been bearish, and we can see that the daily order flow is also bearish here. At this point, we don't want to look for buy opportunities, but only want to look for sell opportunities. When we go down to 1 hour time frame, we had a change of character here. There's a market structure shift, and from that time, price has been pushing down. And what I expect is price to continue and break below that level. I do take my trades during the open of London session or during the open of the New York session. We have a bearish break here where price is showing that it's going to continue downwards because this candlestick has closed just below that market structure continuation line. Now when there's a close below this line, then that is a signal to me that we are still pushing down. Now we also have another break here, which is also a confirmation that we are still pushing down. Now when the London session opens, there's likely to be manipulation. This is what I call liquidity run. So this may happen just before the London session open or after the London session opens. So let's just go back to our trading plan so that we can see what I'm talking about. Make this a little bit larger. The weekly order flow is bearish, daily order flow is bearish, and I'm just looking for alignment on a hourly order flow here. So this is an alignment that the order flow is still bearish, and what I want to see now is the liquidity run on a hourly time frame. So liquidity run is where price pushes up to a PD array, which could be an order block. So we have an order block there, and we also have this one here, and I just want to see where price is going to draw liquidity from. If it's going to draw liquidity from here or here. So market structure shift is the next step after the liquidity run. So back to 5 minutes. Now you will see this clearly on 5 minutes. So this is what I talk about liquidity run. You can see that there's an aggressive push upwards. This has continued on the London session open. So you can see the London session opens and the 5 minutes candle also pushes up significantly to take out the liquidity at this level. And not just that level only. Price has also taken liquidity at this level here. And all the liquidity pool that was lying here has been swept out. Remember, we are still bearish, and this is manipulation that comes during the session open. So we can see that price has pushed into this order block up there. Now if we refine this on a 5 minute time frame, I want to see price dig into that zone. So the next thing I want to see here is market structure shift with displacement. Now you can see that we've had a massive push down, and there's likelihood that price might come back to retest this fair value gap up here, or it might just retest this level and continue down. Now here is where we want to establish which zone is premium and which one is discounted. This zone is discounted and this one is premium. So this will form my high probability. We have a massive push up where price has pushed up and then started coming down. So any close below that, then that becomes my entry signal. So that becomes my entry. Now this is the sign of weakness. When price closes below this line, then that's a sign of weakness. My stop loss is going to be above the high. Now always want to put my stop loss at a safe place. If price takes out this level, then I know that we are no longer bearish, but price will be on a short-term bullishness. So this is going to be our take profit, where we take the partial and full profit can be taken down here. So when price gets to this liquidity level, then I'm going to take 50% of the position, then leave the rest to run, possibly to this point. That way I will have secured some profit and not be worried if price reverses on me. So we have price push down and we have a drawdown here. So this is the reason why we put our stop loss above the high, because sometimes drawdowns might be quite big, and at this level we know that we are safe, and if we are wrong, then we can get out of trade knowing that our analysis was not correct. Just go on 1 hour so that we can see clearly. So if you are patient enough, then you can wait. You can turn this into a swing trade and wait for it to close. So this is one example of my back testing the, let me call it ICT concepts that I've used to develop a simple trading strategy that I apply on my day trading. So if you want to learn how to apply these ICT concepts, then subscribe to this channel. Make sure that you've turned on the bell so that whenever I post a new video, then you can be the first to be notified, and you can share this with somebody who is also struggling to learn how to apply the ICT concepts. Someone who is struggling to become profitable, you can share this with them as well. Make sure that you like this video. Leave behind a comment. Let me know what you want me to cover under the ICT concepts. But what I've basically done is to simplify the ICT concepts. There are so many concepts, but I've just picked a few that I apply in my trading. So you really don't have to apply everything that you've learned from ICT, but you can pick a few concepts and use them to develop your trading strategy. Have a solid plan and rules that you apply in your trading. So looking forward to seeing the next video as we continue to backtest and use a number of trading examples to show you how to apply the ICT concepts.